Hey everyone, this is Jenny from Real Estate English Academy, the place for real estate experts to boost their English. Today's lesson is all about improving your vocabulary from A to Z. Ready? Let's get started. As we all know, in today's world, it's absolutely necessary for real estate experts to be able to communicate professionally in English. This channel is dedicated to the language needs of real estate professionals who work around the world and need to be confident and fluent in English when talking to clients, colleagues, or when doing things like giving presentations. That's why I've put together some of the most important real estate vocabulary going through the alphabet from A to Z to make your life easier, whether you're at the office or out in the field and have to communicate in English. Real estate vocabulary covers a wide spectrum. There are words that describe different properties and different locations, or that relate to investment and financing, property management, building technology, leasing and renting, and much more. To make your life a little bit easier, I've picked out some of the most common words. You'll also find a timestamp in the video description below. That way, you can go back again and again and review the words that are most valuable to you. And of course, don't forget to subscribe to this channel and hit the bell button to turn on notifications. And as a bonus, I've also included a link to a free quiz so that you can test how well you know the real estate vocabulary covered in this lesson. Okay, let's dive right in and start with the letter A. Asset. Something of value owned by a person, corporation, or other entity. Our European retail fund sold 3 assets in Spain last year. In the real estate context, the term asset typically refers to a real estate property that is held by an investor or an investment fund. International real estate investors oftentimes hold many assets, including residential, retail, or office properties in different countries. Okay, let's move on to the letter B. Built to suit. An arrangement in which a property owner agrees to construct a building to a tenant's specifications. At our new location in New York City, we needed to have showrooms and storage space on the ground floor, with offices and conference rooms on the upper floors. A property like that was impossible to find, so we bought a built to suit. Basically, in this situation, the owner and the future tenant come to an agreement, which is usually fixed in a contract, that the owner or developer will build the property exactly to fit the tenant's needs. On to letter C. Central Business District. A city's downtown area where the main business, governmental, recreational, professional, and service activities of a community are concentrated. You may hear someone say, "We just moved our offices to the CBD. It's super central and can be easily accessed by public transportation." The CBD, which is short for Central Business District, typically consists of a variety of high-rises and landmark buildings, as well as shops, restaurants, and other recreational offers like theaters and museums. Let's move on to letter D. Default. The failure to make payments on debt. During the 2008 financial crisis, many homeowners defaulted on their mortgages. In other words, they were unable to service the debt outstanding on their homes. It's in the nature of real estate markets that they experience ups and downs, and in times of economic stress, many homeowners may default and have to sell their homes, sometimes even at a loss. E. Eviction. The legal process of removing a tenant from a rental property due to some violation of the lease. We just learned what happens when homeowners are in default. If tenants are late on their rental payments, they could get evicted. Typical reasons for getting evicted include non-payment of rent, unlawful use of the rental property, or a violation of health and safety codes. Tenants receive an eviction notice from their landlord and then have to vacate or leave the property at a set date. Now let's move on to the letter F. Floor plan. Architectural drawings showing the layout of a building, including exact room sizes. When buyers look into purchasing a property, they want to know about the layout of the space. The floor plan provides them with an overview of just that. In a built-to-suit project, the investor can determine what the floor plan should look like so that it meets the requirements of the intended use. G. Greenfield. Undeveloped land, usually located in semi-rural areas, that is used as a site for expanding urban development. An investor might say, "We found a greenfield site outside of Chicago that we're looking to buy. It's large enough to build a distribution center for last-mile logistics." Greenfield sites basically refer to land that is undeveloped and can be built on without having to remove or demolish existing buildings. Next up is the letter H. Holding period. The period during which a person retains ownership of a capital asset. We purchased the asset in 2008 and we intend to hold it for a period of 20 years before renovating and selling it. The holding period basically refers to the period between when an investor purchases an asset and sells it. On to letter I. Income. The amount of money earned during a certain period of time from leasing a property. In the real estate world, the term income typically refers to the amount of money collected by a landlord from a tenant or group of tenants for using a particular space. You might hear a portfolio manager say, "Last year, we made considerable rental income on the real estate assets that we hold in our portfolio." J. Joint venture. The joining of two or more parties in a specific business enterprise, such as the development of a residential project or a shopping center. Within the scope of large property developments, several parties may join together for a certain project. Typically, the reason behind this temporary partnership is to share the associated project risk, which is usually financial, or to combine their expertise to get the best outcome. K. Key performance indicators. Key performance indicators, or KPIs, are measurable data used to evaluate the success of an investment. The KPIs of the assets in our logistics fund have improved significantly year over year. That means that when asset managers look at quantifiable data, such as rental income, tenant quality, and lease terms, things have gotten better compared to the previous year. This could be due to market factors, such as rents going up in a particular region, or property-specific factors. L. Leasing, letting. 3 of our assets are leased to the same client. 3 of our assets are let to the same client. What's the difference? Is there a difference? Well, the answer's clear. Yes and no. Make sense? Okay, let me shed some light on this. The term lease is predominantly used in the US. The term let is used in the UK. The noun lease is a written contract between the landlord and the tenant and specifies the details of the relationship between the two. Another interesting point, in lease agreements, the landlord is sometimes referred to as the lessor and the tenant as the lessee. M. Market value. The amount for which a property can be sold on a given market. We had our assets in Germany appraised last year. The market value has gone up as the real estate markets have been doing well over the past couple of years. The fair market value of a property is usually determined by appraisers. Appraisers use different valuation techniques to determine fair market value for buying or selling a property. appraisers usually use available market data and comparables to determine what the current fair market value is of that property. I'll go into more detail on valuation methods when we get to the letter V. Next up is O, occupancy. The ratio of space rented relative to the amount of space available for rents. The occupancy rate at the shopping mall in San Francisco has gone up from 80% to 85%. Occupancy rate is a KPI that describes the leasing performance or take-up of a property. A high occupancy rate, combined with above-market rents from strong covenant tenants and long lease terms, makes an asset attractive and drives up its value when reselling. P, premises. Land and all the built structures on it, especially when considered as a single place. The company is relocating to new premises. There's no smoking allowed on the premises. Hot desking allows companies to reduce their space to significantly smaller premises. In real estate, premises basically refers to the land and buildings that a business occupies as an owner or a tenant and that they use to conduct business activities. Q, quarter over quarter. Used to compare aspects such as asset performance with those of the same period in the previous quarter. Our retail portfolio performed well quarter over quarter. On a quarter over quarter basis, the occupancy rate in our Italian assets went down. Another common phrase is year over year, which is used to contrast performance on a yearly basis. In market reports, the phrases quarter over quarter or year over year are often abbreviated as QOQ or YOY. Next up is R, rent control. Regulation by the state or local government limiting rents in order to stop them from increasing too much. Both developments will have rent control and will be suitable for elderly and vulnerable citizens. By imposing rent control, state or local governments try to keep explosive rental growth at bay. Real estate investors take rent control regulations into account in their investment decisions, as these provide a legal framework and limitations for rent increases. S, supply. Describes the quantity of properties that vendors are willing to sell at a given price. Current supply of retail properties in Munich, Germany is scarce. It's a seller's market with a supply bottleneck in Paris, France. Both of these examples indicate that the current supply of properties in these markets is tight. In real estate markets, the forces of supply and demand interact with each other to determine the price of real estate. If there's low supply and high demand, property prices tend to rise. In contrast, if there's low demand and high supply, prices tend to fall. T, take-up. Take-up is a measurement of gross leasing activity for a given period of time. Take-up on the U.S. market has been up for quite some time now, leading to record lows in vacancy. With immigration numbers up in the UK, we are seeing higher take-up in large cities. Take-up basically refers to space that is physically occupied by tenants or owner-occupiers. Take-up in the central London retail market rose by 13% in the previous year. U, upside potential. Estimated possible appreciation of value in real estate. The property is located in an up-and-coming neighborhood in Paris. It has a lot of upside potential. There are several factors that determine a property's upside potential, like location, amenities, and potential increase of rental income. The opposite of upside potential is downside risk. Real estate investors carefully analyze a property's upside potential compared to its downside risk before making an investment decision. Let's move on to V, valuation. The process of valuing a real estate property, such as through an appraisal. We have our portfolio properties appraised once a year to keep track of the resale value. We need to prepare a valuation report for our investors. Valuations are generally prepared when a property is being purchased or sold, or as a basis for taking out a loan for financing or securing a mortgage. Valuations may also be required for insurance or tax reasons. The term valuation is more common in the UK, and the term appraisal is typical in the US. Let's move on to W, wear and tear. Wear and tear is the physical deterioration that naturally happens to a property from ordinary use, aging, or weather. When we moved out, we got our full deposit back since there was no damage except for ordinary wear and tear. Tenants have to return the property in good condition. Normal wear and tear cannot be avoided, and it's not considered a problem. Wear and tear includes floors in need of basic maintenance, faded carpets, and chipped paint. X for calculating area. In English, area measurements are typically expressed in square footage. The reception area, which is only 12 by 12 feet in size, is quite small. This rental unit has an 8 by 10 foot storage area. The multiplier X is turned into the word by in spoken language. In order to find out the square footage of the storage space, you need to multiply 8 by 10, and you'd have your result, 80 square feet. The term square feet, by the way, is abbreviated like this in written texts. Y, yield. Yield refers to the money earned from an investment and is usually calculated as a percentage based on the capital invested. When we purchased the asset in Poland, the initial yield was 4.8%. After a holding period of 10 years, we had an exit yield of 5.2%. Yield can also be a measure of the overall supply and demand situation on a given market. When demand is high and supply is low, yields typically decline. This situation is also referred to as yield compression. And now for our final letter, Z, zoning. Regulations regarding the use of land and the types of properties that can be built on it. The city's new zoning code specifies a height limit of 9 stories on any new building. San Francisco has strict zoning laws to preserve neighborhoods. Zoning can be divided into residential, commercial, industrial, and agricultural. Zoning typically imposes height limitations on structures to protect other property owners. There might also be restrictions on how many of a certain type of structure can be built in an area, as well as on pollution and noise levels. Congratulations! We've gone through the entire alphabet from A to Z. I hope this video has given you a ton of valuable information. As you know, this is just the tip of the iceberg and there's so much more vocabulary to cover. But I can only do so much in one video, so if you have any real estate vocabulary or topics that you'd like to learn more about, let me know in the comments. I'd love to find out which topics are most relevant to you. And don't forget to test your real estate English skills and take the quiz that's linked in the description box below. And as always, if you liked this video, don't forget to hit the like button and click on subscribe if you haven't already. Thanks for watching. See you next time.